All right, so hello everyone, and welcome to today's webinar, Biopharma M&A and Investment During a Downturn. It's so great to see so many of you on the webinar today. I hope that all of you and your family and friends and colleagues are continuing to keep safe and well. My name is Adam Griffiths, and I'm Senior Director and Biotech Lead here at LSX, based in London, and delighted to be hosting you today on this webinar. The next in our Biotech Innovation Series in partnership with AlphaSense. We have a number from our own community who are joining us today, but also a number of those who may be a little less familiar with LSX. So before we kick off, I just wanted to briefly introduce LSX for those who don't know us. LSX stands for Life Science Executives. We're a community and network of senior life science decision makers across biotech, medtech, and health tech businesses, big medtech and pharma companies, the full range of investor base in life sciences, as well as payers and providers, and other key stakeholders in the healthcare sector. As well as virtual and digital content like this, many people know us from our high-level, large-scale conferences, partnering events, and showcases that we run in Europe and the US, including our LSX World, USA, and Nordic Congresses, which connect our community throughout the year for education, partnering, and networking. Today, though, we are delighted to be working with AlphaSense for today's session, who uses a market intelligence platform and leverages the power of AI to extract insights from an extensive universe of both public and private content, enabling you to make critical decisions and stay ahead of the competition. Today, though, you're going to be hearing from a few different people. Firstly, Matthias Muellenbeck, SVP and Head of Global Business Development and Alliance Management at Merck. Stephanie Sirota, Partner and Chief Business Officer at RTW Investments. Michael Margolis, Senior Managing Director, Co-Head of Healthcare Investment Banking at Oppenheimer & Co. Edward Kivell, Vice President of Global Strategic Accounts for EMEA and APAC at AlphaSense. And finally, Joshua Dance, SVP here at LSX. So I'd like to ensure that we give a minute or two to allow any latecomers to join before I hand over to the AlphaSense team, who will be guiding us through today's session. So just a couple of quick points to mention from me before we kick off. So firstly, we will have the opportunity at the end of the presentation for me to put any questions you might have for the AlphaSense team. And I would encourage you to please make use of this time to ask any questions or follow-ups from the presentation. At the bottom of your screen, please ask your questions in the Q&A section at the bottom at the end of the presentation, and we will look to answer as many as we can afterwards. Please do use the Q&A function rather than the chat function for your questions. Secondly, if you see a question that you wanted to ask in the Q&A section already, you can upvote that for the question you wanted to show and are also interested in the answer, and then we will look to address those first. So please do use these functions and ask any questions that you have at any point throughout the session. Now I'm going to hand over to Ed. That's it from me. So Ed, on that note, over to you.
Great. Thank you very much, Adam. You did a great job of introducing AlphaSense. If things don't work out with LSX, you can always come and join AlphaSense. We'd be happy to have you. But hi, everyone. Yeah, as Adam so eloquently said, my name is Ed Kivell. I lead our global life science business here at AlphaSense. And for those that don't know too much about AlphaSense, AlphaSense was founded around about 10 years ago to be a disruptor to the likes of Bloomberg, Thomson Reuters, some of those legacy market data platforms. Over the last 10 years, we've grown massively. And I joined the company now around about 4.5 years ago. I was actually employee number 100 at AlphaSense, and AlphaSense is a New York headquartered company, and I was the second employee at AlphaSense here in Europe. Kind of fast forward 4.5 years, we're nearly 1,500 people globally. We have 150 people here in London. And that success has very much been down to a couple of things. Firstly, the quality of our product, our search engine, which I will be introducing you today. And some of you may already be users of AlphaSense. And then secondly, it's been the quality of our client. So AlphaSense, we started off as a tool for hedge funds, asset management, the buy side, sell side. But very quickly we moved into the corporate space, and pharmaceuticals was our first stepping stone into the life sciences space, specifically working with use cases across competitor intelligence, strategy, BD&L, search and evaluation. There's so many great use cases and how our technology can be leveraged. I'm looking forward to showing you more of a business development search and evaluation use case today. But really the plan for this presentation, and it won't just all be about showing you AlphaSense. We're going to take some kind of snippets of information that we found relevant to the M&A market as a whole, how our clients are essentially leveraging new technologies to help them deal with the climate of uncertainty that we're currently in. I'm also going to take you through some of the data points that we've actually gathered from AlphaSense that we think might be of interest to you. And then at the end, we'll go into some details around how AlphaSense is actually being leveraged by BD&L teams, search and evaluation teams, big and small, to really make the most of our technology. So let's start off by looking at kind of some of the kind of current climate of uncertainty. And I don't want to labor too much on this point because there's probably people on the line here that know far more than I do of what's happening within the M&A and biopharma space. But information that we've gathered from AlphaSense. Now, AlphaSense has a great collection of investment banking research reports, and we partner with pretty much every major investment bank, from Goldman Sachs to Cowen to SV Leerink, where we got this piece of information from. All of those reports are available within AlphaSense. So something that I found within our tool is this report, which looking around the number of transactions, what's happening within the M&A biopharma space. So really, there's been quite a dramatic decrease in the number of transactions. I think everyone knows what's happening within the economy. Inflation has had a major impact on that. But what we'll see later on is that investors and companies still have money to spend, and they're still sitting on cash. How do they plan on implementing that money? Because from what we see, the number of transactions, and I'm sure Matthias can speak to this later on, and the visions for large corporates is very much to grow their business through M&A in the future. Especially as we see patents coming to an end across many key products across our clients, M&A, looking for new opportunity, inorganic growth is becoming more and more important to them. But as we, as a business, we help our search and evaluation clients, BD clients, look for new opportunities. What type of opportunities are we seeing them look for, and how are they using AlphaSense to find that needle in the haystack? And what we've found in our conversations with our clients is that that needle in the haystack is becoming harder and harder to find. And that's generally because they're looking for, especially within this climate where they're not going out and buying their large competitors, they're looking for more smaller opportunity. And we can really see that within the data. So here we can see transactions have fallen by quite a lot from 2020 to 2021. Now, this is backed up by what we see within what management are saying. So using AlphaSense, so the other part of our platform is not just broker research, but we also have a huge amount of company documents, and we have a fantastic way to search through those company pieces of information. So looking very quickly at what we found in AlphaSense is what are CFOs are saying, what are CSOs are some of the largest companies are saying. So generally the key consensus from a lot of the large pharma is that early stage opportunities rather than late stage opportunities is what they're looking for. And we can see a selection of quotes here that we found within AlphaSense, generally focus more around uptick in M&A, but not necessarily big M&A. And I think there's a really great quote here from the Severin here from Roche, who's saying that early stage opportunities rather than late stage opportunities because of the valuations that they're still seeing in the market. And it's not because they probably don't want to purchase their kind of largest competitors. It's generally because of what they're seeing in terms of maybe sitting on their hands, looking for those smaller size opportunities around that. So just to maybe summarize some of that is what we've seen so far from the research that we've done within AlphaSense. And I think we took a quote from one of our analysts that we have within the platform at Canaccord. It is, I brackets, we need a hero, but biotech M&A is likely to be smaller cash deals in 2023. And that really sums up the information that we found within the platform. So really the challenge that we've identified and we speak to our clients on a daily basis is how can we help them find that needle in the haystack? How can we help them find that phase one or preclinical biotech company using our technology? And that's some of the examples that I'm going to go through in the second part of this presentation. Generally, we've been down this path. I'm sure some people have been down different cycles throughout their careers, but what we generally see and what we've gathered from our own research, especially that people that invest during the downturns are generally the most successful people. And we can see that from the data that we've seen through past recessions. And I'm sure we will see the people that invest now will be the successors out of this down period. So where does AlphaSense come in? So first of all, we help you access high quality information. So we have high quality content like investment banking research reports. We have company documents, so conference transcripts, earnings calls, press releases are all included. We also have KOL interviews as well. So we have we have interviews with industry experts, former employees, physicians, doctors. We also have regulatory information. But what AlphaSense allows our clients to do is we overlay it with a very powerful search engine, which can help them save a huge amount of time searching for all of that information, helping them find that needle in the haystack. And the key challenge that we see from a lot of our clients is that actually, especially if you work in maybe a small company, you're a one-man team or you're a huge BD&L team like we work with at GSK, for example, you'll have the same problem, and that's dealing with the huge amount of content that's out there that's doubling every 24 months. How do you search for all of this content to help you find relevant information very quickly? And this is kind of some information that we've gathered around looking around. Actually, information is doubling every 24 months. AlphaSense's technology is all about solving this problem of information overload. So I've kind of touched on this, so I won't go into all of this in detail, but really this is the example of AlphaSense. We bring all of the content that you need and we think is relevant. So there's regulatory information, that investment banking research, things like The Lancet, Fierce Pharma, all of those different premium news sources are all included within AlphaSense. And then we overlay all of this content with a very powerful search engine. And our clients, especially within the pharmaceutical space, leverage AlphaSense at every part of the clinical trial process. So we generally see that research and evaluations teams might leverage AlphaSense for their clinicaltrials.gov presentations to help them identify early stage assets. And then they might track that information throughout FDA, and then they might leverage the investment banking research reports once they get into a later stage and evaluating the market size. And then we can see that later on in the process, they might start to leverage the KOL interviews. So really AlphaSense can give you this 360 view of all of the content that you need, whilst also making it completely searchable and helping you save time and also mitigate the risk of missing key pieces of information as well. So couple more slides. I just wanted to run for you one very quick example of what happens within AlphaSense. I won't jump into the platform, but I'm just going to run through a few slides. So this is a really kind of classic example of what AlphaSense look like and how BD teams or search and evaluation teams could use AlphaSense. So I've run an example here within AlphaSense. So this is the screen of AlphaSense here, and we're looking at CNS, for example, and phase 1. So AlphaSense then is going to search for all of the documents that we have within AlphaSense, looking for relevant information around CNS and phase 1. So here, what we can see in this arrow is that AlphaSense has identified me 405 companies that are developing CNS and phase 1 clinical trials. So rather than you having to maybe dig through the internet or search for a lot of information, AlphaSense has directly found you 405 companies that are relevant to what you're looking for. So here we can see an arrow, and this is maybe a company that we're interested in. So this list of companies here that I'm interested in, maybe I want to look at what Gossamer Bio is. Maybe I haven't heard of them before. I click on Gossamer Bio here. You'll notice that straight away, Goss has gone into the document up here. We still have CNS in phase 1. Now AlphaSense has found me all of the relevant documents on this company, all in one place. So it allows me to first of all, look at this company directly. Then I can see all of the relevant content here on the left-hand side. I can click on this UBS report. I can then click on this middle column, and then I can go straight into the part of the text where we're looking at UBS analysis of Gossamer Bio's business. So a lot of the clients love this because it can help them save a huge amount of time just looking for individual companies, but helping them dig straight into analysis of what this company is doing within the CNS space. So once they've maybe identified this company, they've evaluated this company, and then they can actually maybe dig into what here we can see what a KOL interview thinks of them. So here we can see what a pulmonologist thinks of Gossamer Bio. So rather than then you having to maybe go and use a third-party consultant that's going to cost you an arm and a leg, you can then access this this expert calls directly in AlphaSense within a couple of clicks of a button. So that's a kind of a classic use case of AlphaSense within the BD&L and search and evaluation space. There's hundreds of different examples that I could have run today. Thank you all for listening. And if you would like to learn more about AlphaSense, please do let ourselves know, or the guys at LSX, and we'd be more than happy to show you in more detail. But thank you very much for your time.
Thank you so much, Ed, for that really insightful presentation. And it's really cool to see how AI is informing this kind of market intelligence. If you'd just like to stop sharing your screen for the moment, we will move on to the discussion. So once again, I would like to introduce Matthias Muellenbeck, SVP and Head of Global Business Development and Alliance Management at Merck Group, Stephanie Sirota, Partner and Chief Business Officer at RTW Investments, and Michael Margolis, Senior Managing Director and Co-Head of Healthcare Investment Banking at Oppenheimer Group. So this discussion is going to be moderated by Joshua Dance, who is SVP here at LSX. And it's on that note now, Josh, I shall hand over to you.
Fantastic. Thanks, Adam. Thanks for referring to me as Joshua as well. It's only my mum who calls me that, so this is a new one for me. Yeah, delighted to be hosting the sort of panel discussion part of today's webinar today. We've got a great lineup who Adam has just introduced. Just as a reminder, if you do have questions, I see we have one from Stratos already. Please do put them in the Q&A function, and we'll look to address them throughout the panel discussion or at the end as we get through. We can also upvote those questions. So we're going to sort of structure this in a sort of progressive way. So first, we're going to look at some of the factors that Ed alluded to that have been sort of influencing the M&A and the investment landscape during this downturn. A little bit more about how everyone is sourcing deal flow, looking at their market intelligence, looking into some of the challenges that are facing the investors and deal makers at the moment in this space, and then maybe some crystal ball gazing about the year ahead and what we might be able to expect throughout 2023 and onwards. So we obviously have a range of perspectives from a pharma deal maker, an investor, an investment bank, as well as Ed and AlphaSense on the market intelligence side. So what's clear is obviously after the heights of 2020 and 2021 in investments, it's been a lot more of a challenging public markets, and that sort of trickle down effect into the private markets is happening, and that sort of depressed M&A market as well. So I guess from all of your perspectives, and perhaps start with Matthias on this, given the start of the presentation, what have you seen as being the main factors driving this sort of current landscape on the investment, public and private, and the sort of deal making and M&A in the sector? What would your response to that one there be, Matthias, to kick us off?
Sure. Yeah, thanks, Josh, for handing over the question. I mean, look, let me start maybe really with the perspective of Merck KGaA. And, you know, for the ones of you who follow us a bit closely, I think you saw that we didn't really slow down over the last years. Yeah? And this is why I also think that 2023 will be really another, let's say, active year when it comes to deal making. And the reason for this is twofold. And this is what we communicated also to the financial markets, right? I mean, we follow literally two verticals in our view of the market and our, let's say, inorganic approach. One is called #25 by 25. So we really aim for growing the top line of the company to 25 billion by 2025. Again, throughout all sectors, of which healthcare is one within the Merck KGaA. And the second target is what we call Mission 50% plus. So we aim and thrive for raising the level of externally sourced assets really to 50% in the near term. And I think these two kind of narratives tell you already that for us, you know, it doesn't matter so much if there's a downturn or upturn. I mean, we follow really the targets we like, we follow the science we like, and really want to do smart deals in the field, not only on really late stage commercial assets, but also rather on, let's call it, platform and preclinical assets. What's important for us before I really, you know, want to share some observations for the market is focus. I mean, focus for us as a mid-sized pharma player is really key, and we really look at this not only from a very clear strategic narrative, as I was just telling you, but also when we think about core indications, MOAs of interest, and also specifically validation levels for these diverse MOAs. When we look then at targets, and I think that is really the question a little bit, Josh, that you answered, I want to share just three observations, right? I mean, of course, for us, synergism with the existing portfolio, and if it's a commercial stage opportunity, of course, with the commercial infrastructure is key. I mean, we believe that you can only really win, even if you want to, let's say, invest into a more strategic move with a certain level of synergy that you can pull off. Secondly is, of course, expertise, fit, and feasibility. We call it focused leadership. You may have seen it also in the press here. So we really only want to compete on areas that we focus on, which hopefully then also means where we're good at, where we have expertise beyond the financials of a deal. Because especially if you think about, let's say, structured M&As, or if you think about more partnership-like transactions that we see more and more these days, it really, you know, it matters what you make out of the asset together, right? To kind of really unlock the downturn financial potential, and that is then linked to the overall commercial potential, which is really the third point. I think that is important for us, right? And here it's really about this #25 by 25 that I was just referring to. In terms of looking at deal types, and that is also what we see in the market, people become more and more agnostic of the relevant deal type. Is really more a question of fit on the one hand, and secondly, I think, and we may explore this then also later in the panel, really, let's say, the actionability of certain targets that may be, you know, higher for certain and not so high for others, but maybe I spare the answer to that part of the question for a later part. Fantastic.
And yeah, perhaps Stephanie on the sort of investment side and sort of how you've seen the sort of investment dynamics from RTW side.
Yeah, thanks. And it's great to get to hear, you know, Matthias's perspective on this, because I think as investors who are full life cycle, we do private and public investing, and we incubate companies. We often, you know, get the question from our LPs, well, what are you seeing, and what do you think that pharma? Well, I don't know what pharma's doing. Like, we can all kind of see it at the same way. But I think one of the things that actually Matthias said that kind of resonated with me is that we've also branched out the way in which we do our search and evaluation and kind of hunting for assets. We're a very science-driven firm, and it used to be that, most of the ideas were really generated internally from our asset selection team, attending medical conferences, and really kind of being, in that front row of gathering information and synthesizing that data, and then really thinking about long-term, like, what is going to be the next transformational asset that's going to impact like the top and bottom line of the companies. And so we were thinking about making investments in that way, not really just looking at, kind of capturing a slice of momentum for a company that's trading, on the NASDAQ. I think, these days we're also really sourcing investments from a number of different ways. And we're looking kind of up and down the capital structure for interesting opportunities. It's not just equity these days, and it's not also just all internally, generated ideas. We are having many more conversations actually with BD teams at biotech and some pharma companies. We're having more engagement with our investment bankers, looking at maybe non-core portfolios, that some of the larger companies maybe want to dispose of so they can focus on their core areas. I think there are many more sources of assets for us to kind of look from some of our strategic relationships, in addition to, really hunting for science. So that's kind of, we're casting a wide net and then narrowing it down.
And Michael, I suppose you're sort of working with companies and transactions sort of across the spectrum, really. So what's your sort of take on that current landscape?
So I guess I bring a bit of a unique perspective to the table. I think those of you who have kind of followed my career, I spent time in business development at Novartis in Basel. I spent time at Lilly back in the early 90s. I also worked in the buy side for a period of time about 20 years ago. I've been a banker since 2006. So I've worn a number of different hats, all in life sciences and healthcare, which I think, when you kind of look at this downturn here and you look at the market dynamics, there are a bunch of things happening. And look, I think you got to be a lot more strategic about how you approach, I think, life sciences, especially just given the downturn we're all going through. And one would argue that we're about 2 years into this downturn. The peak of the XBI was in February, I think it was February 9th, if I remember correctly, of 2021. And it's been kind of a downturn since then. And now with the XBI sitting in the low 80s. Certainly it's better than where it was back in June of last year in the low 60s. But there's definitely a ways to go. I think there's a couple dynamics out there, and I look at the strategy and certainly BD and M&A. Look, I think first of all, everyone's looking for a very healthy M&A market. I think we did see some, we said mostly smaller transactions last year. The one big transaction certainly was Horizon Amgen, which is, I think we're not going to see too many of those. We're in a regulatory environment in the US here where the FTC certainly is and I think our government in general is very sensitive of larger mergers, even seeing smaller transactions get scrutinized tremendously. I mean, smaller deals that are less than $1 billion getting really kind of really scrutinized and really a lot of pressure to get approval. But I think you also have an issue here, certainly with the IRA bill, the impact on small molecules. And I think I speak to my colleagues in big pharma and large pharma and big biotech. Everyone's trying to digest kind of their focus on small molecules. And I think the pendulum always seems to go from one extreme to another. And that still has to be decided and figured out and kind of what the strategy is going to be. I don't see people are not walking away from small molecules, but their development strategies are going to change. That's just kind of, I mean, the people are still trying to figure out what that will be. And also the impact on Medicare Part D and the rebate systems, which are a tremendous part of the pricing model today. The other item I will tell you, and talk about kind of the patent cliff, which Ed talked about before, you got over $130 billion of revenue going off a cliff by the end of the decade. And some of the larger companies are really exposed here. And I will tell you, you're not going to solve that with some earlier stage transactions. people have to buy revenue. People have to buy later stage assets. So I think, that inorganic growth that companies have to deal with. I mean, you've listened to every major pharma and biotech earnings call over the last couple of weeks. It's all about their pipeline. It's all about BD. It's all about M&A and kind of what their strategy is going to be. I think Pfizer talked about kind of their strategy and how they have a P&L gap in the latter part of this decade they have to fill. They have not been able to fill yet. So I think these are all questions and kind of, are not going to be decided on this discussion. I look at things, especially in my career, I've been doing this for over almost 25 years in healthcare. This is a tremendous opportunity. The market's going to come back. Is it a function that's going to be the latter part of this year or 2024? My crystal ball is still a little, I would say, blurry at this point. But I do know the innovation in this space is tremendous. There's a lot of interest in the I&I space, for example, whereas oncology, broadly speaking, especially immuno-oncology, is less in favor today. But we all know subsectors of biotech and pharma go in and out of favor with time. And that's just, I think we're seeing that evolution as right now as we live through it.
So I guess a positive message there. Broadly, it is all coming back. Would you sort of echo those comments, Matthias? You said you already have been active and will continue to do so. Are we potentially coming out of this downturn? What are people's thoughts there?
Yeah, I mean, look, what are we seeing with the XBI market correction is really at the end based on a kind of high interest rate environment that we have because we have a high inflation environment, right? If you look at the predictions, I think people are hopeful, right, that we get kind of or reach peak interest rates by 2024, 2025-ish range. Yeah. If you look even in historical kind of comparison, you see that high inflation levels come in waves, yeah, in kind of 2 to 3 year kind of intervals. So I personally think we are far from this crisis is far from over. I agree with Michael that, I think the funding environment will kind of slowly but surely come back to a certain degree. But look, truth to be told is also that strong biotechs and strong science typically attracts very strong investors, right? A lot of them cashed in very richly, when it was still a kind of, bull market a couple of years, one needs to say, by now already ago, right? So I think the strong biotechs that have strong kind of investor syndicates, they're here to stay. I would rather argue, and I think, Michael, you touched slightly on it, that parts of the industry are maybe overinvested. So for example, if you look at long-term averages of Series A companies in major markets around the world, I think the long-term average for kind of oncology companies is a 250 to 300-ish range, right? At the moment, we are rather in the 500 plus range. Again, it's I'm not saying it is overinvested, but there are indicators, I think, that guide you to this, where I really do think they will see a lot of market consolidation amongst peers. Yeah, because one of the major problems, of course, that you have from a buyer perspective is at the end that, with boards that may still not accept the valuations as they are today, and I don't know if they are real or not. I can only, for public companies, look at what they are at the moment, right? I think one of the reasons why companies are not being bought is simply because, no one is willing to pay premiums that would be in the, multiple hundreds percentage ranges, to satisfy a kind of valuation that is maybe, 24 to 36 months old. And I think that is something where we see that a lot of companies have also, discussions in their boards, because some investors also rather, tend to utilize this market opportunity that Michael was describing, right? To exit now, cash in and reinvest into maybe a better opportunity. But again, for me, that is really not true for the high quality biotechs, because here, they just sit it out at the moment. And I think, as long as that is the case and the valuation levels will reach again, right, some sort of level that is satisfactory to the majority of the owners of these companies, you will see a sudden kind of flush of deals.
And look, I think here's the other thing, thinking about what's happening in the marketplace. There are too many public companies. We've seen that. And we had 200 companies go public during the pandemic in 20 and 21. And many, at least in the latter part of that IPO window, many of those companies are preclinical and unfortunately went out at very high valuations, and the market didn't perform well. But I think we also don't appreciate valuation. companies, and Matthias, you can speak to this directly, but I also experienced this. Companies don't buy opportunities because they're cheap, right? They buy because they're strategic, right? There's a disease area strategy within a company, and that gets updated maybe annually or semi-annually, and you buy because you have P&L, you have pipeline opportunities, right? So if it happens to be things are cheaper, you can get things at a better price. Most of these companies are using their extensive balance sheets to buy these companies, then they use their P&L basically for the premium and certain and development costs. But this is not about being cheap. We saw this during the financial crisis, where there are piles of BD opportunities on every single BD executive's desk, right? They didn't buy their way out of this market. They're going to buy quality, right? And I think that's the key here. And while there are significant needs for companies, especially with patent cliffs coming up over the next, let's call it 6 or 7 years, companies are going to be very strategic about what they do. It's the same way investors, right? Investors are not piling in. And Stephanie, you talk about RTW, because everything is so cheap right now. You got companies trading at or below cash with a negative EV. They're not investing in every company because it's cheap, right? Cheap is great, right? But are they cheap because there's a disconnect and there's an arbitrage out there, or is it cheap because the company has failed, unfortunately, and there's really not an opportunity to create value? And I think that's part of this process. I call it the digestive process in the marketplace, where you have to go through this. So I go back to my previous day. I'm very optimistic about where this market will go. I don't know if it's this year or maybe the back half of this year, but certainly I think we're getting closer to that point where better quality companies are going to be able to get cash. They're going to get acquired and be a strong return on investment for companies and investors.
I think I share that optimism too. I mean, we're not where we were at, the trough, which was June of 22. And I think, even sort of fundamentally, we can apply, a higher floor of value from that point, because we've had some successful commercial launches in the interim. We've had not that many, IPOs, but we've seen the green shoots of companies that had good data actually start to get rewarded. And that's really like one of the signs of seeing a healthier market. So actually, like one of our positions, talking about I&I, Prometheus had great data in December, and the stock, went up 185%. And that was like the first time that we'd seen sort of this type of action. So I think when you're also looking at the landscape of the number of companies out there, you're right. I mean, we had a record number of IPOs during the pandemic. The majority of those, those two IPO classes are trading like underwater. This is really going to be a period where you see the higher quality names that are backed by, not just tourist capital, but are backed by investors who know what they're doing and who are dedicated to the space, like RTW and then our extended peer group. Those are the companies that are going to succeed because they're going to be able to tap into financing, whether it's equity, which is hard and more expensive to come by, or combinations of equity partnerships, royalties. We're doing an array of like creative financing for companies, and I think that the quality companies are going to pull through this. We haven't seen as much consolidation like peer to peer as we think ought to take place, but hopefully some of that comes too. You may need like a consolidator to come in and like make this happen, but it might also be boards that are constructive.
I'm sorry to interrupt you, Stephanie, but I think you touched on an important point. I think the social issues often get in the way with boards and management teams about potential business combinations. There's obviously some of your peers, especially kind of at the low point last year, talked about kind of fusion, consolidation. You got to leverage cash and other companies' balance sheets, because there's still a lot of cash out there sitting on balance sheets.
That's
There's
right.
also a lot of cash sitting on the sideline as well to come in. I mean, an inordinate amount of capital has been raised on the private side over the last couple of years. But I think you get these social issues. I think what I'm seeing today, especially in the microcap space, and this is not relevant to RTW, but there's a certain group of hedge funds out there that could basically put money into any company, and these companies are just kept alive, right? for candidly the wrong reasons. And I think now you're finally seeing, which is helpful, is there isn't a clearing price for some of these deals. There aren't enough warrants you can put on a transaction. And I think that's healthy, because I think as we go through this cycle and you have less companies, hopefully you have eventually less companies. The ones that are left are going to garner the higher quality money.
Yeah, that's right. I mean, that's right. We're saying today that we're investing in one of the most asymmetric environments that we've ever invested in. So actually, I mean, if you believe in what you're doing, and you have sense fundamentally of what you're investing in, and you're willing to kind of stick with it, this is actually a really, really terrific environment to invest in.
Yes. Yeah, maybe just to chip in, we hear that from our clients, saying that it's trying to find, or it's become more and more competitive to find that quality company. And when you do find it, it's even more competitive once you get down the line with the process. I don't know if that's something that you found, Matthias.
I just wanted to comment along the same lines. I mean, there are the obvious candidates if you have active in a certain disease area, right? I mean, pharma companies line up here. Why I think for us it's so important to stress the point that for us the transaction is beyond the money, right? Pharma companies can do valuations very well, plus minus, yeah. So you will end up more or less at the same price level that you should pay a company, but then it depends really of what is your conviction in a business case? What's the synergies that you can leverage? What's really, let's say, your market insights and know-how beyond what's public, right? That drives you at the end to really move, let's say, your chess figure in the right direction. I think that is something really, really important to think about, because as I think Stephanie, you said it nicely, right? I mean, our shopping list hasn't changed really, right? I mean, we like the ones, the companies and the people we like, right? And there are others where we look at, of course, but they're not primarily on our list. I think the only thing that really is different, and Michael touched on it already, is that the number of unsolicited approaches has really risen sky high, right? And here a lot of things are not of interest for us, because again, we feel we have a very good kind of proactive reach out and grasp of our opportunity space, yeah. But some things are indeed interesting, especially around, let's say, when companies are offering their lead assets, because these were, at least, traditionally you would classify those lead assets as not actionable from a kind of transaction perspective. Yeah? But as we're moving into a phase where, again, some kind of investors want to exit, or kind of consolidation beyond peers is there, or investors want to have this company as a shell to do something else with it, right? That is, I think, something that is interesting, right, to look at. But yeah, in general, right, I think we know what we like and we don't know what we don't like.
Well, perhaps maybe a good opportunity now to sort of move on to how you mentioned there, Matthias, your sort of inquiries going through the roof there, but how are you, or how is everyone, I suppose, sort of updating this market intelligence function, sourcing deal flow? Perhaps coming to you first, Ed, and maybe folding a question we actually had from the audience here after the presentation from Stratos. While we're on the topic, how does the AlphaSense database how is it being updated with new documents that are being issued every day? You showed that sort of graph of the uptick and how much information there is. How is that database kept up to date?
Yeah, it's a great question, and I think everyone, Matthias, Michael, Stephanie, you've all alluded to the fact that there is just so many companies out there, and there's so much information being produced on these companies on a daily basis. And it is really the core challenge that AlphaSense looks to solve. So the data that flows into AlphaSense is in a live basis. So we've acquired lots of content partnerships with all the different investment banks, as well as LexisNexis, other different regulatory bodies. And we plug that into our data set. So if there's a new clinical trial that's changed from stage 1 to stage 2, you can be alerted on that, really ensuring that you're hopefully not missing any key pieces of information. I know, Matthias, I know that your Merck has a big kind of strategy for this year. Has your technology process, are you doing it kind of the way that it used to, or have you changed your processes internally?
Yeah, I think it's two things, right? I mean, we deeply invested into technologies, right? I have to admit, not yours, but it doesn't mean anything. But truth be told is, of course, I mean, for everything that is a clinical stage or commercial stage opportunity, we draw from different sources of database. We have our investment banks we work very closely with, selected ones. We screen analyst reports, right? We go to the kind of public filings, what have you, right, to really aggregate this in a really condensed fashion. So we have really specialized analyst teams within our search evaluation team or market intelligence team, however you want to call that, right? Where then at the end, and I think that's key for us to really ensure also momentum internally, where you have a true cross-functional evaluation in a relatively agile manner to just throw the necessary pieces of information together, because still we do believe that relevant information has to be processed by experts. I mean, it helps, of course, to get an overview, like, across things, right? But for example, I'm not a regulatory expert, right? I can have an opinion, but it's not the expert opinion. So we do truly believe you need to have that expertise and the expert's eye, senior expert's eye looking at it, and then you can have a very quick informed call rather than doing, long search and screening work by maybe more junior functions. I mean, it's just a nuance, but I think that is at least where we arrived from a conclusion here.
Stephanie, you alluded a little bit to how you were doing things as well. I think in terms of sort of going to events and things like that and sort of folding that data together, how has the sourcing strategy on the deal flow strategy changed at all in terms of how RTW are looking at deal flow and potential investments?
How we're looking at deal flow?
Yeah, and sort of finding, the investment opportunities. Has that changed at all? Do you using any sort of different?
Yeah, it has actually. We have really kind of honed this process, and we kind of formalized, a process around, our search and evaluation. And so it's very methodical, and it kind of covers, a number of different sort of screens. And, part of it is engagement with academic institutions. And then, part of it is really engagement with peer investors. Part of it is engagement with, Michael and his peers, or Matthias and his peers in BD. And then, I would say the bulk of it, though, is really our our kind of internal search engine. We've got, 27 people with PhDs or MDs who kind of focus on particular areas of expertise, either particular therapeutic area or a modality. And then it's really just kind of, sifting through large amounts of information and really trying to pick what we believe are going to be, near to medium, not near term, but medium term, major, transformational winners. So disruptors in the space, and there's a lot happening. So, if we had this conversation half a dozen years ago, we would have said, yeah, we're not really looking at CNS, and there's nothing, exciting happening in the brain today. And that's totally different. We're very excited about what's happening in the brain. We're very excited about, autoimmune disorders and inflammation. And we have been early, backers of RNA medicines, and we're really excited about next generation RNA. So there's a lot, I think gene therapy specifically had a tough year in 2021 around safety issues, and is gene therapy, that's not atypical for the early years or early innings of a novel technology. And even though that, wasn't super early for gene therapy, was definitely second, third generation, it's not gone. It's still a technology that we really believe in. It's going to have a really great use for particular disease areas. So yeah, it's really kind of matching some of I think for us, the way we think about it is really, matching the right modality with the right disease area. And is this modality the right way and the best and most efficient way, to get drug into these cells? And is it safe? So I think we try to look at things from the lens of therapeutic area with the right modality, and trying to marry the two.
Did I interrupt you there? I think maybe you had a sort of follow-up question there, or was that sort of where you were going with?
No, maybe to Stephanie. Do you struggle with private company information? Is that something that you focus on?
So with private company information?
Yeah.
So I think one of the benefits, and we kind of talk about this a lot because we're a full life cycle investor. So one of the benefits is that you do get an information advantage. And if you think about all of the new, modalities, I mean, they're being developed, in academics, and they're being developed in private biotechs. And so you kind of need to be an active check writer to get into those data rooms and to really properly assess, the information, because it does present a huge information advantage. I think on the flip side, it's equally important to continue to be an investor as these companies make their way through, the venture series and on to becoming public companies. Because if you think about it, with an average IPO market cap of, I don't know, it's sub $1 billion for sure, but maybe $500 million, the bulk of the value creation of a real, winning multi-billion-dollar drug is sitting in public hands. So you want to be able to capture that value, and the only way to do that is really to be a public investor as well. So I think it's both. We do have scientists on the team, so we do collect data and have a very large institutional sort of memory. We do have a large library of primary scientific data. So I think that we find ways of tapping into very, very early stage data that's not necessarily sitting in public companies. But it's important to access that. Otherwise, you're making decisions and they're not really well informed.
Relatively conscious of time now. I've got a sort of 8-10 minutes left, and there are a number of questions that a few have asked I'd like to get to. But perhaps coming to you, Michael, first on this one, the sort of the current challenges that are facing both investors and deal makers currently. I think you've alluded to a few on sort of the landscape as it is. But I mean, from your perspective, what do you see as the current major challenges that are facing potential deal makers and investors into the space?
I think it depends upon what type of transaction you're referring to. You're referring to a strategic transaction, more pharma BD and M&A. I think you have issues. Certainly, there's issues over small molecules right now with the implications of the IRA bill. That's certainly out there. Obviously, inflation's out there in a high inflationary environment. I know someone talked about just the cost of capital on the debt side, although I'm not sure I agree with that. I think at least the debt costs are pretty inexpensive. And we have a particular expertise in the convert space, and especially for multi-billion-dollar companies, the cost of capital is really cheap. I mean, really, really attractive. So I think I don't see that as a major issue here. But I think in terms of especially companies and raising capital, it's really challenging. I think later stage private companies looking at opportunities to get public. I mean, there's really no IPO market right now. We've had 2 IPOs year to date. They both have done well, but one was certainly in the obesity space, which is one of the most attractive spaces today. And then the other company was in the cardiovascular space with a fast follower to Syncor, which was acquired more recently. And there's a lot of private companies contemplating IPOs in the back half of this year into next year. I think time will tell whether they open up or not. I think Stephanie could talk about RTW and some of the companies they've worked with on the private side. I think you'll see more IPOs here, but last year, just to give you some perspective, we had 111 therapeutic IPOs in 2021. You have about 11 or 12 last year. I'm not including the $10 million IPOs that seem to prop up along the way. Those aren't really IPOs. But in this year, we've had 2. So if I had to guess, this is going to be a year probably of less than 20 IPOs, unless something changes dramatically. I think the financing side for micro cap, small cap public companies is tough. It's really tough. I mean, as I said before, you're finally seeing situations where there isn't a clearing price for a deal. But then again, you're seeing investors like RTW and Perceptive and Baker and RA, put money behind companies. So Venrock certainly and BVF put money behind companies because that asymmetric risk reward, right? I've never seen such a kind of opportunity for some of these companies. But again, you got to do a lot more work today. And I think the other thing you got to really think about is people, right? With so many companies, there isn't enough high quality management. There aren't enough high quality boards. So, you know, while the science is really encouraging, especially in certain subsectors, and again, I'm really excited about that. I've been doing this for a long time, and I think the innovation curve has never been stronger. At the end of the day, you need people to execute, right? It's really important. And I think, you know, I think some of the problems we've found over the years is that had some really, you know, really, I would say, encouraging science and compounds in the clinic, they were poorly executed. And that's a big risk. And I think this happened years ago where, yeah, you know, companies are incentivized to do a BD deal, incentivized to do a transaction with pharma or biotech, and they tend to cut corners. They'll masquerade phase 1 compounds as phase 2 or phase 3 to hopefully extract more value. You see less and less of that today, but it still happens. And I'm sure Stephanie could talk about what they see, and Matthias could talk about what he sees when they're doing diligence, because at the end of the day, the diligence that's being done by pharma and biotech and some of these fundamental investors, it's significant. It's really diving in, because the biology, especially in biotech, is very complicated, and you can't afford to kind of cut corners on the diligence side.
Perhaps to try and fold in a question actually we've had from Alex to you, Michael, before going to Matthias, and if you could talk maybe about Merck's Mission 50 and how they're sort of looking at the deal-making landscape, I guess, moving forward. Alex has asked, does your optimism, Michael, vis-a-vis M&A funding stretch to include the European markets? And considering the size of the patent cliff ahead, what would you recommend European pharma prioritize, deal-making or R&D in the short to medium term?
I think every company has its priorities, and certainly not some companies have P&L gaps, just like U.S. companies, European companies need to fill in their P&L and their pipeline. Sorry, their pipeline, not their P&L. I think what I've seen, especially in Europe and the UK, I have to say is separate from Europe today. I've seen a number of new funds start up. Some of these funds have been historically more venture focused, private company focused. Seeing funds like Nextech, for example, really get into the public markets, and that's part of their new strategy. And while they're looking at both European, UK opportunities, but also US opportunities, you have funds in Israel, of course, that are looking at ex-US opportunity, looking at US opportunities as well as European opportunities. So I think the reality is that I think it really depends. I'm actually encouraged by what I'm seeing in Europe. I think some of the science that I've seen, especially in the UK and the Oxford area, is really encouraging. We've seen some smaller M&A as well out of that area. I mean, I've always been impressed, having worked at Novartis for a number of years, by the science in Europe and in the UK. I think these are areas we have a lot of experience. And I think that's important, by the way. You go to certain areas of the world where you have healthcare and life sciences, and they don't have enough intellectual capital to run these companies. It goes back to you're investing in people, right? So the science has been really good in Europe and in the UK. You know, a lot of ex-pharma people, you know, got a lot of Pfizer folks, GSK people, AstraZeneca, Novartis, Roche. I mean, that's some great science there that's been developed over the years.
Does that ring true? I guess Matthias is a German-based pharma. Everything Michael said there, and I guess maybe what you see as the challenges as the pharma deal maker on the webinar here.
Yeah, look, I think it's very much true. And we see also a trend that more and more kind of investors, again, reorient themselves out of oncology rather into neurology, immunology, as I think is really the next play fields for precision medicine. And I think here Europe has a really, really strong kind of position scientifically, but also when it comes now to valuations, right? Because again, it's a very different market. Also, if you think you were saying in Michael, right? Personnel stuff, right? I think you have very overheated markets in the east and west coast of the US for good and bad reasons. Yeah, that is not the case, at least to that extent, right? If you think about Golden Triangle UK or also certain spots in Germany, right? So I think there's a lot of things that can happen. The two things though I wanted to add to the original question, really, Josh, was one thing we didn't have time really to dive into today is, of course, market access and pricing. I think that is an area where we see, when we think about challenges, and also to educate people with whom we want to do deals, right? Especially in the US, we see a lot of companies are, for good reasons, right, focus very much on getting it right for the US market, but they mostly kind of lose sight a little bit on Europe, and also Asia specifically, right? But you have IRA in the US, right? You have MNOC and kind of the percolating kind of decisions from there in the European Union. And then you have VBP in China and other things in the Greater Asia region, right? So I think there's a lot of pressure also on the kind of overall profitability of pharma and biotech companies, which just makes it challenging to really, combine with what I said earlier, maybe slightly inflated vis-a-vis market capitalization currently view of boards, right? Sometimes to struck deals, either if it's a strategic, M&A or if it's a licensing transaction, right? Why I think one of the things that we see at the moment is in fact an increase in kind of risk sharing deals, so co-dev, co-co, where really, you share the risks together, you share the upside, and that sometimes is the magic recipe. Also to the question I think of one of the participants asked, to kind of bring both of these things in line. Yeah, you get kind of some non-dilutive upfront considerations and maybe early milestones. At the same time, also, right, there's a continuous influx of R&D funding. So maybe even platform companies are the lucky ones now, right, in a funding environment that is very dry.
Fantastic. Yeah, I guess doing my job for me, looking through the Q&A and answering some questions. I appreciate that. And I guess maybe, we're almost over time now. Maybe any last comments from Stephanie here on, I guess, maybe some of the things that Michael mentioned. I know that RTW have sort of set up offices in London over the last couple of years as well. Yeah. So the investment dynamics and the challenges from your side, and then maybe finish off with Ed, and that'll be us.
Yeah, no, I've been coming to London quite a lot over the last few years, and could not agree more with Michael. There's so much really great science in the UK, and not just, Oxford, Cambridge, UCL, but I mean, throughout. We're really, really impressed on the work that's being done there. I think, and this is hopefully changes because there are, newer sources of capital that are coming and putting a flag in the ground and starting to invest locally. But it's a lack of the, robust capital markets ecosystem that we have here in the US that really is not the same over there. So I think that, the UK companies and the entrepreneurs have to, they're forced to hustle a little bit more. And it's harder, I think, naturally to start engaging with US investors. But we decided that we would go to them. And I think that there are other firms that are doing the same. So I'm really optimistic about, finding really, high quality assets, either, to invest in direct or, to start a new company around, which is something else, that we do. And so really hopeful that that's something that, we'll be able to talk about in the coming months or years.
Fantastic. And I guess, Ed, sort of starting with you and finishing with you, any sort of having heard the insights from everyone you'd like to add?
I'm actually in Frankfurt now. We've just opened our office in Frankfurt, and that's really based on the demand that we've seen throughout Germany and Switzerland as well for our product. So we see it going from strength to strength, and look forward to partnering with those companies in those areas even further.
Fantastic. Well, we are a little bit over time already. I want to say a huge thank you to Ed for the presentation, AlphaSense for hosting the webinar, to Matthias, to Michael, and to Stephanie for joining and making my job extremely easy and discussing a huge amount in quite a short space of time, I think. I'm sorry we didn't get to all of the questions, but I'm sure we can try and answer some of those separately.
There's always another panel, Josh.
There's always another panel. We do plenty of content, so come back to LSX for more of this great insight from someone put it in the chat, big fishes like yourselves. We have recorded this webinar. If you did join late, I saw quite a few joining late. We will send this around afterwards. But maybe Adam, I can hand back to you to sign us off.
Cool. Thanks so much, Josh. And thank you all for joining us today. Also, thank you to the whole AlphaSense team for sharing their expertise with us all today. As Josh said, we will be releasing the slides to all attendees, and I'm sure the team at AlphaSense will be very happy to discuss the content of the presentation and any other ways that they might be able to help you and your business after the webinar. So we will be sending up a follow-up email to all of you who are registered as soon as possible, which will include a link to the full recorded webinar. But until then, thank you all once again for joining us. Thank you again to Ed, Matthias, Michael, Stephanie, and Josh as well.
Great. Thank you very much, guys. Bye-bye.
Amazing. Thanks so much. See you all soon.